From April 27th to 30th, the Dubai Chamber of Commerce and Industry, in partnership with the ICC, hosted a global meeting entitled Dubai 2014 Gateway to Sustainable Trade and Development. The four-day event was the largest in the history of the ICC Banking Commission meetings, with over 400 delegates from more than 60 countries. The delegates included representatives from the World Bank, WTO, business leaders, finance experts, lawyers, government, and ICC Banking Commission officials, all of whom succeeded in their objectives of forging new business partnerships, alliances, and the sharing of ideas. In his keynote address, His Excellency Hisham Al-Shirawi, Second Vice Chairman of the Dubai Chamber, expressed his pleasure in the Chamber's hosting of the ICC Banking Commission's biannual meeting in Dubai for the second time.
Our partnership with the ICC Banking Commission is excellent, and we are delighted to be working together again to reinforce our relationship for the future. Since the last meeting, which was held here in 2009, many developments have happened to Dubai's economy. We experienced a slowdown as everybody else, but we have also proved our ability to rebound and drive economic growth despite external pressures. The IFC now is ranked as the world's fastest growing international financial center. It is helping to attract Dubai's top banks, money managers, and legal firms to our city. As such, Dubai is firmly positioned as the region's leading banking and financial hub. It is also becoming increasingly an important trade and a financial hub for the world.
The ICC Banking Commission is the world's essential rule-making body for the banking industry, and since its founding over 80 years ago, has gained a reputation as the most authoritative voice in the field of trade finance.
The ICC and the Banking Commission has a very, very long history. All right, the Banking Commission itself has a history of more than 80 years. ICC, more than 100 years. Over the course of the last 80 years, we have been instrumental in supporting world trade, the various importers and exporters in the world. In many ways, we supported world trade through some very important products like letters of credit. Having said that, the world is changing very, very rapidly. Our customers are telling us they want a broader and more diverse set of products. Therefore, it is important for us to introduce new products to meet the changing needs of our clients. In many ways, they want it fast and they want it efficient, all right, and cost-effective. That is a challenge for the banking industry, and that's a challenge I think ICC is very, very well placed to meet.
The bank payment obligation is a new instrument that helps facilitate trade electronically and provides risk mitigation so that the banks as well as the customers have the ability to have protection within the transaction as well as financing through the transaction. And it's really a unique opportunity to leverage data rather than documents in order to facilitate trade. So using the trade services utility developed by SWIFT, we've created an instrument jointly between the ICC and SWIFT that allows for the customer to have certainty of payment and possibly financing of their transaction. So it's a means to bring trade into the 21st century.
So basically what we're doing with the International Chamber of Commerce is to enable corporates and banks to digitize their trade flows. A lot of electronic flows are being exchanged between corporates to replace paper-based processes. And now what corporates expect is to do the same with their banking partners. They have the letter of credit that is existing since centuries, but that is quite inefficient in the way that it is based on paper exchange, and that is also the case in the bank-to-bank space. So with the bank payment obligation, we're enabling the full trade circle, to the full trade transaction to be dematerialized, digitized, using ICC-owned rules.
The letter of credit is still an essential instrument within the finance of international trade. That said, it's one of a suite of instruments, and there are some which are probably going to go faster than others, especially those that have a digital component to them.
Over the 4 days, the gathering discussed global outlooks on markets, harmonising business practices, developing common terminology for supply chain finance, and the impact of Know Your Customer regulations and sanctions on business.
So the Basel panel this afternoon here in Dubai raised some excellent points in terms of the state of the industry and its response to regulatory requirements and the effective advocacy of the ICC, not only in terms of qualitative advocacy and information education, but also in the strength of data-driven and fact-based advocacy, which is supported by the ICC Trade Register. And so both of those dimensions of ICC's efforts have generated some very demonstrable and clear positive impacts in terms of assuring appropriate treatment of trade finance from a regulatory and capital perspective.
We discussed about the UDG for guarantees, which are only on the market for about 4 years by now, but already followed by regional laws like the law in China or in Russia. Both civil laws will be aligned to follow the UCP, the UDG 758 practice. We saw that we have a number of court decisions based on UDG, where the judges recognize UDG as an international standard. We also discussed about the new rules like BPO or ORF, which are new to the market, which also deal with new products, newly developed products, but of course are also meanwhile recognized standards.
What really came out was that in this region we're seeing two major engines of trade growth. One is Saudi and another one is Iraq. It clearly came out that Iraq is a country with tremendous potential, very important for Asia-Iraq corridor as well. Another thing that came out was the growing importance of Islamic trade finance in this region. One of the panelists with me also spoke very strongly about how they are seeing this as a double-digit growth for them. And we clearly believe that they are going to be strong drivers for this going forward. A few things that we also talked about, another thing we touched upon was renminbi. Although we say that for MENA as a whole, on the corporate side, renminbi transactions are just in the initial stage, but we believe that the potential is there, and definitely from what we are seeing on the central bank side, I think they all believe that this is a region with potential to see more renminbi growth going forward.
I think that the finance sector is addressing the growth by having local banks and regional banks playing a much more dominant and prominent role in international trade and helping their clients with import and export financings in their markets. So it's not just the big banks, the known global banks that play a crucial role to provide trade finance, but it's really across the whole banking industry. And therefore I see more players emerging in trade finance, working together with the multilateral banks and working together with the big commercial banks to provide trade finance to where it's needed.
The meeting also included ICC Banking Commission task force and working groups gathered at the side events to discuss technical topics related to bank guarantees, anti-money laundering and compliance, factoring, forfeiting, legal issues and regulations.
People have the misconception that because this is an Islamic country, then they only have Sharia as legal framework. This is not correct. We're talking about countries where you have very modern, civil law-based, comprehensive set of laws governing every single aspect of commercial and of civil transactions. You need to do your diligence to understand that they come from a civil law background. So references to floating charge, reference to trust are totally meaningless. Comparatively speaking, when you talk about pledges, when you talk about taking security over assets, then those have to be followed according to the rules which are laid out in this country. And it is very possible to have a foreign law clause applicable to your financing. And it's up to you to choose whether your case should be submitted to the local courts or to international arbitration. Arbitration is an avenue which is extremely exciting in this country, with a number of international arbitral institutions offering to administer in very top international standards arbitration cases.
One of the things we've been talking about today is the revision of the delegates rules, which are dispute resolution set of rules that the ICC has been using for a number of years. The Commission has, over the past few years, increased the span of instruments in trade finance that it looks after. It also has rules that are new rules coming in that go into the supply chain and into factoring and into forfeiting, and as a result of which the delegates rules have to be brought up to date and made relevant for the future. As a result of which we've had a discussion today, an interesting and lively discussion around some of the issues about that increase in scope.
So sustainability, we really have to make things sustainable, meaning that we deliver a good world to our next generation. We as a banking industry, we have to develop, we have to listen to our corporates. What can we do, how to make trade sustainable? That's the goal here of the ICC Banking Commission in Dubai.